Good morning. All righty. Well, we have a possible pattern here today that could produce some decent downside intraday anyway. It wouldn't damage the daily trend yet. Certainly might begin to put it in question if this follows through. And what I'm talking about here, if this was the end of the day, I would be quite certain it would follow through, but it's not. So what's beginning to happen, right? You see this little breakout right here after the bottoming tail bar. It ended with a small topping tail. I know we're looking at the futures. I'll look at SPX, but it's based on the pattern here for now. And if this day was to close like this is the beginnings of what we call a breakout bar failure. And they don't always have a bottoming tail bar. This is right out of the MTS manual. But what happens when it breaks this low, it starts to move lower. And of course, it's always, well, lower to where? Now, this bottoming tail being here, that would be the first stopping point, but damage would be done to this, somewhat damage done to this daily chart. It would actually have to violate this pivot low right here to violate the trend, which is currently up. So put it in perspective. Now, what we have here, there's a little head and shoulders top going on with the 24-hour chart and what's happening here pre-market. So here's what's called the neckline. And below that is what we call a price void. Because the momentum move higher, there's nothing to stop it from going down. Don't bother with this. Don't bother with your fib lines. Don't bother with your VWAPs or anything else. Now, potential stopping point, these overlapping opens and closes. There's going to be a base in a smaller time frame right there. That could be something that's a focal point. But when we compare support to the left, you have to compare it and put it in the perspective of what happened after that. Meaning you've got this topping pattern here, which, okay, we're looking at an intraday chart, but it encompasses multiple hours. You know, if we were looking at a daily chart, this could encompass several weeks, right? Almost a month. If this was a daily chart with this many bars. So if you had a topping pattern like that over the course of a month and you saw, oh, you know, this little thing here, would it stop? Well, it might, but I would think no, it'll be a stopping point. There'll be jiggles there, and then it would continue lower to where, you know, more traders would be focused on a point of greater significance, which would be this little break lower and move up. So we'll see how that all unfolds. And, you know, at the end of the week, we'll see where this actually is. You know, does it go sideways and up, or does this actually follow through? You know, there are times where these head and shoulders patterns fail and they do create significant moves. So every pattern that we look at needs confirmation. So even if we would say, okay, here's this pattern down here, and I said, okay, here's this bottoming tail bar, the next thing would be, out of my mouth would be, okay, we will buy it if it trades above that bar's high. That's the confirmation. And, you know, it's not a confirmation of significance, but for every trade, we require some level of confirmation. So here, we needed to break below this level. See, in any same pattern analysis in any time frame, Tony. Now, the implications, what I said, if this was a daily chart, there's greater implications than an hourly chart where, okay, we're looking for a move down to the area of 3,600, you know, that bottoming tail bar. So in perspective of the daily chart, you'd say, well, big deal. Well, granted, from an intraday point of view, that's a pretty decent move. So we got to keep it in perspective. Now, if it was to go down there and now you had a bar, let's say that bar looks something like that, and you've got a relatively large red bar closing down there, we would then say, hey, the bottoming tail had little to follow through. It then failed. The breakout failed. It's closing down here. And that daily pattern would now have greater implications of a potential move down here. So we have patterns, where here's a big bottom pattern there, and here's a momentum move. And here, I talked about the momentum slowing here. And now we've got this little pattern. So our job is to understand these and put them together and then see what actually happens. Now, bar by bar analysis, that concept says, okay, what does this bar mean and that bar mean? And it gives us an ongoing analysis of what preceded it. And then, of course, the future. So as we see, like, let's clean up this drawings here. We see prices move down like this and go vertical. And we see a wide range bar coming into this area. Well, that tells us within the near future, prices are going to stabilize because this is an exhaustion bar and it's coming into an area of support. So now we're getting ready for what we believe will happen. We don't know what it's going to look like. So I have no idea that it's going to look like this, but bar by bar analysis tells me, oh, okay, now this is working out the way I thought it would. But of course, it could have gapped down that day and formed a big green bar out. Look different, but the meaning would be the same. Right? So we do not teach you, like some people in this industry will say, hey, you see this picture, right? This picture is what you look for. And that picture does work, right? At times, I don't know what they're showing you. Let's assume it's something that we look at, and it works. But the downside of that is different time frames produce different pictures, and different days and in market environments produce different pictures. What I'm showing you here, bottoming tail versus a gap reversal, is, hey, these different pictures look different, but they mean the same thing. So that frees you from the box that you're putting yourself into. And it just allows you the freedom of, I guess, different movements of what's going on and understanding what's happening. It does take time. So at the beginning, maybe focusing on one thing is good, but it'll begin to frustrate you, right? What on that buy setup of support where your stop is below the bottoming tail bar, right? So every pattern in the market environment that we have here. So when you get a wide range bar, you can go a little bit below a bar like that because it's a wide range bar. It's going to have to fall far to get there. Whereas a narrow range bar, let's say, I'm just finding something here for time, a narrow range bar, and you get a 180 reversal, I might go with a larger stop, a little bit more wiggle room, especially over here, a little more wiggle room. It didn't poke under there, but there's just a tendency for things to wiggle more than they did in the past. And that comes to share sizing. All right, so let's continue here. Yeah. All right. Exactly what McGraw is saying, allows you to be open-minded and flexible, right? Those that will say, hey, look at this one bar, especially this narrow range bar, and can you risk this one bar? Well, that's kind of, maybe that worked like 20 years ago, but in this market, it rarely does. So be careful of marketing versus, real trading in real market environments that are fluid. All right, let's continue here. So right now we've got an inside bar going on here. If we go to the spiders, so we can get to SPX, it was this gap up yesterday and it looked like it was going to go to the moon at one point, and it didn't. And we've got this topping tail, and I went down to 364-ish, 20. So under there, it's at 365 or so. 365. It's gapping below here, and that's bearish. So now we've got these longs from yesterday trapped. And that should tend to put a lid on the upside here, at least in the short term. So those looking for this to follow through now are questioning those positions because of this gap down. Of course, as would we. Right? So here's the void, right, that we looked at on the futures. This move down, that open gap. We'll see how this plays out. But again, we've got an area of supply overhead now where those longs are trapped. And so as far as SPX goes, there should be juice above yesterday's high. And that is going to be what I refer to as a protection line. Now, do we want one protection line or could we go further above? Where's the juice? So the further we can get above here, the greater the probability that even if the market comes back from this gap down, right, a little breathing room is always good. It could form a gap reversal, and of course that is going to begin to negate the head and shoulders pattern in the void to the move to the downside. So we just have to see how it plays out. And so we want to get away from here and onto the downside, down below 3,600, 3,685. That should be okay. It should be okay. I think that should be okay. But, we can assess the price action in the first 5 or 10 minutes and how that plays out. But I would say down below 3,600, right, there's your line here. And then, as always, well, there's an unfilled gap down here too. So as we look at the charts, you can see. And then we decide, 3,600, 3,580, is there anything down here? Because if there was, and it's highly unlikely, I think, just based on historical types of moves, that the market would fall all the way down to 3,550 in one day, because that would be one gigantic bar. So if the market begins to fall, right, here's what we do. The market begins to fall. And so now we assess in the morning that, okay, above this level over here, there above should hold. So you go for the call side. Now, the market's falling. The premiums in the puts, they're increasing. It's falling. Right now, it falls down here, you're basically home free on the upside. The premiums on the put side are now beginning to pop if this falls fast. So the faster it goes down here, the more you go down to where the major support is, where it's not going to go, and you can then consider the put side. So not all days, provide that, but that is what you would be looking for if this actually does start to drop to the downside. As it comes down to a level like here, 3,600, where we believe buyers would be, and it begins to stabilize, well, you go down here. And you look at your trade table. Is there juice down there? So get as far away as possible. Be willing to take a little less money for a perceived, let's call it 95% probability of a winning trade. All right, let's look at the other markets. All right. So we don't have that type of breakout bar failure here because these aren't even bars, but we had a little bit of a range expansion. It's beginning to drop right here. So what we see today, I would be interested at the end of the day, since this was a pretty strong move to the upside, a little peekaboo above the highs, it looks like, certainly above the closing highs, that intraday high right there. It even peaked above that. If it closes down here or below that bar, of course, that has bearish implications. It doesn't violate the trend. But, 3 times up here, we've been talking about the market internals. We've already gotten deterioration in the breadth. Sentiment is up here. We've had 2 days intra-morning where the put-call ratio is below bin 0.5. We've seen what's happened. It doesn't happen immediately, but it tends to put a lid on things. We know it's getting frothy. So we got an eye on the exit door. Yes. The Dow's been underperforming. 30,000 keeps getting rejected, as it did yesterday. It's been underperforming, but it hasn't violated the trend yet. Another example of slowing momentum, but it will have to, because definition, it's made a higher high. And to violate the trend, it's got to violate the prior low. And that hasn't happened so far. It's just a consolidation. So, we're in this choppy consolidation mode of markets waiting for something. I guess the coronavirus needle's out there waiting for you. For those of you that want to be the guinea pig, I don't. The election drama, that should be a soap opera by now. And does, in your opinion, have the momentum to continue trending? I would have to look at that on another platform. I don't look at Forex, Isaac. So I don't have that on here. I don't believe I do. I have the futures. I can try it, but I have little interest in the Forex market myself. These markets keep me busy. And this e-signal may say to, I didn't even type it right, NZDUSA. I don't even know how they put that in here. But I'm in the other platform, in TC2000. I have Forex. We could look at it in the green room. Yeah, we could look at it there. Anyway, Forex, I've never traded it. I think it's a manipulated market with, brokers trading against clients. I'd much rather prefer trading the futures market. So you got currencies here that you could trade, futures markets, which are much more honest. That looks like a little bit of a climactic move there. So maybe the dollar is going to bottom at this point, and that would be something you can consider with the price of oil. And okay, let's continue so Dan can come on. It's getting too late here for me. You guys making me talk too much. Bonds turning down. Just consolidating there already, the beginning of a deterioration. The larger bar, we'll see if this breaks, meaning it's at the bottom of a wider bar and the bodies are staying down there. And crude oil backing off here a little bit. Still looks okay. Gold, pretty big reversal. We'll see. Need a little bit more information for myself. And silver, did great. Right, so the beginnings of a bottom here, and probably worth an initial picking up of ETF if you so choose, and an initial position and waiting to see how we can deal with that resistance. All yours, Dan.
Good morning. So all our opens are fine, and we did a great job nailing the highs in these EV stocks. And I think we also did a good job not getting caught up in new swing longs yesterday. Greg was giving a play-by-play of, the internals and going into the building on fire. But, yesterday was a bullish day. Gap up, took out the high, went strong. For a day trade, that was a beautiful trade right there. And then we had a breakout failure. Today we have MT Live's going to be really, Greg and I got to pat ourselves on the back. We give you amazing free MT Lives, and today's going to hopefully be another eye opener to directing you to your trading plan and what trading's all about, and finding the patterns that you do. And we're going to go through a little case today on Jumia, the late day breakdown yesterday. We were shorting that, some of us in the green room yesterday. That's a couple questions here. So all our opens look fine. So we have a number of call spreads on these climactic EV stocks. That one, Pelletier, Neo. I mean, a bunch of these. So I've tightened the stops on a bunch of them. Someone's asking about Tesla. Yeah, this one would be a bear call credit spread candidate also, but I just didn't want to step in front of the uncertainty. I guess it's going to be added 12/21, so there's nothing wrong at all of doing a short-term trade per the charts. But as we get closer to 12/21, when it's added to the S&P 500, I really don't know what's going to happen to this as funds are required to buy it if they have a fund that mimics the S&P. I mean, their charter makes them do that. So we have a bearish gap down here. So it's a short-term top, but you can see here it's a trading range now in the 15-minute chart from yesterday's high to 2 days ago low, and it's climactic right here. So I would say based on the daily, it looks like a short on a bounce, but I don't know what to do with it right here. Ravindra's asking about, I have got in Myrna at 130. That is actually another, you got in at 130. Okay, so every single time somebody asks me their opinion on a stock, you must. Greg, I think I need to make a slide today for MT Live, and it's just going to be in all capital letters in blue or red. What time frame are you trading? Because I can't give you an opinion otherwise. If you were swing trading, Myrna, this is a classic gap and crap. So yesterday morning, when it had a bear 1, 2, 3 continuation and topping tails, we sent to our subscribers in the weekly options trader to short the 240 calls that expired on this Friday, 3 days to expiration, and it had $2.30 a share. So, okay, so now day trading, it's extended. It's a sloppy retest here using the pre-market data. It's kind of near this gap fill. So, buyers are stepping up here. So if you're day trading, stop yesterday's low. If you're swing trading, I mean, the same. I would have been out of that a long time ago. Hey, Janet, your drop down. Oh, unless you're just talking, you're talking to Greg. Okay. FT, it's a cold stock. FT trader, you know what? That's a personal thing, I guess, for your trading plan. You can have do not trade stocks, whatever. Do you know how many people were telling me this week, do not ever short, Dan, you're out of your mind. I'm like, well, I know, but that's a different story. Don't short these electric vehicle stocks. And I'm like, I'm a pattern trader. What do you mean don't short it? I see a pattern and I short it. I manage in between. So if just because something's a cult stock, a cult stock, maybe that's why it's setting up a bearish pattern, right? Because everybody's in. And once all those cults are invested or bulls, then guess what? Things that go up like a rocket, they will come down. They will. It's just a matter of when. Look at Aurora here. We bought this Aurora, another EV, on this igniting day. And then look, it went from $3 to $10.50. And now it's coming back to earth finally. Oh, somebody in the green room asked me yesterday, hey, Dan, and it's when this was I think it was $49 as it was falling yesterday morning. And somebody asked me, hey, Dan, is it okay if I just buy NEO at 45? And so we had a little bit of a heated discussion. And I said, what on earth are you talking about? I said, I have no idea what it's going to look like if it gets to 45. I said, set an alarm and we'll talk about it then. But I said, you got a climactic monthly, you got a climactic weekly with a bearish reversal, you got a breakout failure, you got a lower low. And now it's $5 under 45. So I hope that was a lesson to that person. All right. What else? Yeah, no, the whole sector. No, the whole sector. We're in a bunch of these. Oh, I don't even know what NNOX does. But Jake, we had a put spread or naked puts or whatever on this igniting bar, and Jake had a home run trade here with a swing trade. All right, let's continue here with some gappers. This was bullish consolidation, but now it's getting whacked with a bearish gap. So that's a shock pattern. Nothing to do with it right now. Zulu India, I think had a secondary offering, maybe. I forget. It had some type of news, but that's a bearish gap. Vive, but for the bearish gap down, that was a very bullish pattern, but it had earnings today. If this, I mean, that would be a bullish pattern to sell a put spread, but again, earnings. So, you know, all bets aside on earnings. Yeah, I think the market wants to head for these gap fills. Qs, spiders have a long way to go, and actually the diamonds are already there. Look at that, diamonds already at the gap fill, but it's